Well, now, automate your savings. What exactly does that mean? Before I even tell you to go ahead and subscribe and hit the like button. By the way, you should go ahead and do that, okay? Now, to automate your savings, it simply means that you don't have to manually remove the money from the, say, checking account, current account, landing account, whichever the money comes to, and maybe put it in a different account. You see, if you rely on yourself to literally go there manually, remove that money and put it in that savings account and what have you, that's not the point. See, when you automate, you see, let me give a very simple example. If maybe you took a loan somewhere from an institution, say for a circle, if you're Kenyan, you know what I'm talking about, or maybe your subscription to a mortgage. You see, they deduct. You see, they usually cut that salary of yours when you're paying taxes, right? See, it's usually automatic. You don't have to do anything. You don't have to initiate. You don't have to do nothing. They just deduct that money immediately. And the moment you're getting that check or whatever, the paying slip or pay slip, they usually indicate all the deductions that you have. You have the pay as you earn, the VAT, I don't know, you have the turnover tax if you have any, you have things to do like mortgages, you have a money market fund, like they show you all the deductions. So when you automate the savings, simply means you say, hey, guess what, each and every, you see, we usually talk about, hey, you're supposed to save at least 20% of your cash towards a what? Yeah, exactly, towards your savings. Therefore, that's 20%. Let's say you earn 100 Gs or 100K. That means the 20,000 ought to go towards your savings. So when you automate that, simply means that even before you get that money to channel it towards the recurrent expenditures like paying your rent, paying the debt and what have you, the 20,000 has already been subjected to the deduction and has gone directly. For example, let's say your subscription, or you have a subscription to the insurance policies, of which I discourage. Therefore, the deduction usually happens immediately because you authorize them to access your account. So the moment you get the payment, they deduct. So when you automate your savings, that is usually deducted immediately, so that if you do not have the discipline of savings, then that money can be channeled towards that specific account where you want it to be for it to reach that purpose of investment. And of course, I used the term savings just to explain the point of you making sure that you salvage some of the money. Basically, what I would advise is that I was about to use the term, automate your investment. Well, I bet that could as well resonated well, but what happened is that pick an account that is giving you a high yield. Sometimes I tell people, if you know you have the fear to invest, if you know you have the fear to go ahead and open some other accounts that I usually talk about, if you feel that you are comfortable with that bank that you have and it's a fixed account, of which again I discourage, you'd rather even go for that because at least you're getting something compared to you just having that money lying idle in a bank. So go ahead, because these accounts, you're going to do something with it. So automating your saving simply means to make sure that you use the technology to rather not do that savings manually, removing it from a current account to that savings account. Let's go ahead and ask ourselves, how exactly can this happen? This can happen in actually 3 ways, but let's concentrate on 2 ways. One way how you can actually automate your savings, A, is by what we call the slice method. The slice method is simply where you get your money, say you get your salary, let's say it's 100K. Let's talk big figures because that's where we are heading, all right? And it's good. See what they say, what you profess, you possess, all right? Or what you confess, you possess. Let's say you earn 100,000. So this 100,000 is your salary, assuming the other deductions and what have you. Now, this 100 Gs that you get a month, let's say you're supposed to go ahead and save 20,000 out of this, or 20% out of this, which is 20,000. So when we say the slice method, is immediately when that money comes, it is get to be sliced even before actually lands into that current account of yours. So that is the slice method, when you actually go ahead and do that specific thing. The slice method is when you separate that what goes for the recurrent expenditure and that what you channel towards what we call the savings account, or that thing that you would love to accumulate your money or store your money for the purposes of reaching a certain amount of money for you to invest that money in future. Now, the other thing, or the other method that you can actually use to save, is when you actually do what called the transfer, is what called the transfer from the checking account, Well, you have an option A, whereby money can actually be deducted immediately, or you can actually have a system where you can initiate a transfer of money, but not manually. That's when you automate from your saving account to what we call, from your checking account rather, or landing account or current account, to your what we call the savings account. So these are two ways how you can be able to do that, what we call the automation of that amount of money toward that specific thing. Now, there is another one, the third option. The third option here is a bit tricky, but I hope I'll be able to make a sense out of it. This is when you can enroll to something that is substantive in terms of the investments or the savings. For example, you can enroll to something like a mortgage. If you enroll to something like a mortgage, it means that that amount of money, yes, you're not saying it in terms of the cash, but in one day you are actually going to acquire that, a home or something of sort. It's quite substantive, so you can actually enroll to a thing that ensures, again, you can actually enroll to of which I want you to take this information with a pinch of salt, because for me, I said for me, I did not say for you, neither did I say it's the standard. For me, I don't resonate with the life insurance and what have you. I'd rather insure that's what is making money than insure myself. Get what I'm saying? So you can actually enroll to this life insurance kind of a thing, whereby some percentage of your cash is actually directed towards that, what you call that insurance, that can help you to grow and propagate yourself to the next level. So if you can actually enroll to a thing which is deducting your money immediately towards acquisition of that specific thing, be it that life insurance and what have you, all right, if you resonate with those things, then that can actually help you to do exactly. You know why we are talking about the automation? Number one, because most of the people do not have the discipline, to actually commit themselves towards directing that cash. The moment money lands in their current account or landing account, they think about consumption. They think about how they can throw parties, enjoying themselves, sending the money, the black tax and what have you, because these things are real. And honestly speaking, if you cannot be able to take precaution as early as you can actually fall a victim of their effect. Did you get that point? Thank you very much. Now, let's go to the point of, well, find yourself, we understand the automation. What's the essence or what's the importance of that? Number one, you can actually go ahead and earn more interest compared to that what you're getting from what we call the normal account. So the current account, you're going to have what you call, because these things are called high yield accounts. High yield accounts, whereby you get to earn more than what you're getting from a current account. I mean, if you're earning anything after all, okay? Now, these high yield accounts, this is where you're actually subjecting your money to an interest. Let's say maybe that interest you're being given there is maybe 7%, 10%, or whichever the percentage, and it's actually above the inflation, because the whole point, the common enemy is the poverty. Number two, the other common enemy that we have is what we call the the inflation. This is simply a bug that eats your money, without you noticing it. So if you can actually throw your G's into a place whereby that account is actually giving you what we call, a certain percentage that is places you above the inflation, then that's the reason why you should move your money from just a normal account to these high yield accounts. Okay, now, what happens is that this high yield account is actually what we call the investments. Basically, that money that's being given birth to, the small money, or rather the baby money, or the passive income, as you may love it, that is the cash now that you can be able to throw parties with it, you can be able to enjoy yourself and do all those and other nitty-gritties that you prefer and love doing out there. The other thing, as far as this thing is concerned, is actually fast. All right, fast in the sense that it's automatic. Automatic means like within a click of a button, the money has already been transferred to that. If time is of essence, of which it is when it comes to the world of investment, therefore you can actually know one thing. For example, let's say, for example, right now, again, I'm going to repeat this point. We have a new IFB that is actually been floated, which is a tax-free. And of course, it has a timeline. If you do not act within the timeline, of course, that thing is going to be off the table, and it means that the opportunity is off the table, then you cannot grab it. So therefore, time is of essence. So how the faster it is, and of course, with considerations of the risk and assessment and what have you, as far as time is concerned. And I always say this, if you can actually exist, you cannot actually confine yourself within the parameters of time in terms of investment, you can actually make as much as you can. The other thing about the automation of your savings, it's actually convenient. It's convenient in the sense that, guess what? You're not convenient to yourself. And by the way, this is what I always tell people. If you can be able to beat you, you are the enemy. You're the biggest enemy to yourself. You are the biggest enemy to yourself. If you get your money, the thing you think about is enjoying, throwing party and what have you, then you squander your money, go back to square one, you start again, you change yourself, you write resolutions each and every beginning of the year, of the month, and whatever. You never done anything, and then to a point whereby you throw your towel, and then you say, hey, you know what? Saving is not even real. This is a joke. It cannot be happen. I cannot save us. You get what I'm saying? So you're the biggest enemy to yourself. So it's convenient in the sense that even if you do not have actually to remember to put back that money toward the savings account, that has actually been done for you automatically. So that gives it the convenience, and also making sure that at least the money that you say that you're going to dedicate towards the saving has actually been channeled towards that rightful purpose. Okay, now guess what, guys? We have other things that we can deduce the importance of automation and what have you. All right, so but now let me just close it from there. Fast and conveniency, and also gives you the character, the discipline, and all those kind of things. But the point is this, guys, make sure that at least you automate your savings, make sure that at least you understand the importance of that, and make sure that at least you move to a point whereby you can be able to understand that savings is important. And remember one thing, just to wrap up this information, make sure one thing: we save for 3 reasons. If you are not savings for either of these 3 reasons, don't even save, don't even bother to save. Number 1, we save for the purposes of what we call investing. That's the whole point. Investments. Okay, we save to invest. So if you're saving for a different reason other than that, we save for another reason, that is B. We save for a purpose of buying or purchasing, or huge purchase. Okay, a huge purchase of a thing. Let's say you're looking forward to purchase a land, a property, an apartment. You want to purchase maybe say a car and what have you. So we save. You see, to save. But I don't know that you've never known this. Savings comes with a sacrifice. There are things that you cannot. There is a thing that you cannot achieve without another one. They sort of complement each other. For example, you cannot speak the language of saving, but this saving is not fun. I don't know that you guys know that. It is not fun. So there is no way you can achieve the savings without you having the dedications, having the sacrifice, the consistency, the discipline, the what have you. So the savings is actually a sacrifice. So savings, we save for the purpose of buying things. Let's say, for example, you want to buy yourself an apartment. And of course, it means there is some sort of, denials in between there. You want to throw parties because you want to acquire that thing. All right. So we save for the purpose of buying a thing. C, we save on the purposes of doing what? Emergency fund. Okay, emergency fund, simply where we want to secure ourselves by putting a certain fraction of our money for the sake of our tomorrow. So we save because of the investment, we save because of when we want to purchase a thing, and we as well save when we want to get ourselves into what we call an emergency fund. So if you are not saving out of, or if you're not saving out of these things, then I don't think you don't even get into the world of savings. So those are the 3 reasons, or major reasons, why we save. And that marks the end of my video. And I hope you got a point, or something that you can actually borrow out of this video. And if you did, shoot me a comment on the comment section. Tell me, yes, indeed I worked. And by the way, let me know exactly where you're watching me from, because I'm thinking of something that I'm going to share with you in the time to come. But if you'd like to get a hold of me in terms of the conversation, my number is always on the description of this specific video. Go ahead and grab it. Let's have a discussion. Let's talk business. Let's move ourselves to the next level. And by the way, don't forget to leave me a like on this video. Make sure that you subscribe to this channel, and make sure that you share this video and you turn that notification bell so be notified whenever I upload a new good video. For now, it's a goodbye, and see you in the next one.